Hey everybody, Todd at 51% Crew. Making this video for the people that missed the Patreon class on Ichimoku Cloud. And if you already went through the class, my explanation, then here's a little refresher for it. I'm not going to go into as much detail as I did in the class teaching it, but I wanted to at least give you guys an overview of what the cloud is and how it is used. So I'm not going to make a long video, so let's get right into it, okay? So we put this on our chart and everybody looks at it and they get real confused, and it's really not that difficult to understand once somebody explains it to you. So hopefully I can explain this to you clearly and get you a basic information of what the cloud is and what it's used for. I'm not going to go into these Chinese or Japanese names or whatever they are. They're kind of irrelevant to me. I'll refer to them more as the English names here. So let's get started. So there's multiple lines on the chart and everybody's going, oh man, what are all these? This is confusing. But let's break them down one by one here. So our first line we're going to review is the leading span A. So this is the conversion line plus the baseline, and then they divide it by 2. Don't really worry too much about these calculations, how they got the lines, because that's the great thing about modern technology. You don't have to do all the math sequences like this. It's already done for you and calculated for you, so it's you're one step ahead basically. It's the same principle as something, if I use an example, would be Fibonacci levels. Everybody knows how to lay a Fibonacci on the chart, but you don't have to know the math behind it, but you know how to use it. You can lay it on the chart and you can apply it effectively to your trading. Same principle here. You don't really need to know all the averages and how they calculated the numbers. So let's go over it. So we have leading span A here. And the reason it's called leading span is because it's plotted 26 periods in the future and forms the faster cloud boundary. Okay, so this is reference to this green line right here. And don't get this confused with the other green line. Remember, the leading span A is the green line that forms the cloud boundary. This can be either on the top or the bottom of the cloud, depending whether or not if it's bullish or it's bearish. So our leading span A, green line, forms a cloud boundary. Next one we're going to go over. Leading span B, 52 periods plus 52 period low, divided by 2. Like I said, that's kind of not important here, so don't let that confuse you. What they're basically doing here is they're taking a moving average and they're taking the high and the low and dividing it in half and pushing it forward. So the value is plotted 26 periods in the future and forms the slower cloud boundary. Okay, so this is the red line here. That's the outer cloud boundary. So leading span A is the green line. Leading span B is the red line of the cloud. This can either be on the top or the bottom, depending on if there's been a twist. So keep that in mind here. We have leading span A, leading span B. Next one that we have to refer to is the baseline. The baseline is also red. This is 26 periods high plus 26 periods low divided by 2. The default setting is 26 periods and can be adjusted. On the daily chart, this line is the midpoint of the 26-day high and low range, which is almost a month. Okay, so basically these are moving averages with calculations. So we'll refer back to that in a little while. Like I said, the baseline is red also, but it is this red line, not attached to the cloud. Don't get this confused with leading span B. This is the baseline. So we're looking at this line here, following on my mouse cursor, okay? So moving on to the next line is the lagging span. This is basically the opposite calculation, and it's plotted 26 days in the past. So that is this green line here that is not attached to the cloud. Most traders I've spoke to, and me personally, we remove this from our chart. It's a lagging indicator, and we just don't use it. Maybe one of you guys can use it for something or have a strategy against it, but personally I don't use this line, and I've asked multiple traders that I respect, and they basically told me they don't use it either and they remove it. So I won't be covering that one in detail. I'll go ahead and pull that off, so it'll be a lot less noise and a lot less confusing on the next chart when I flip over pages. Okay, so now we're going to go into the last line left, which is the blue line, and this is the conversion line. This is a 9-period high and a 9-period low divided by 2. So this is basically a 9-day moving average split in the middle, and it basically rides along with the price because it's the shortest period. So it's going to be the closest one to price action generally. So let's go back over it again real quick. Leading span A, top of the cloud or bottom of the cloud, but it's the green line. It can flip back and forth, okay? Leading span B is the red line, top or bottom of the cloud, depending on if there's been a twist. Then we have the baseline, which is red, and the conversion line, which is blue. So let me get this off of here and move to the next chart. Okay, so how do you read this, Todd? That's great. Now that you explained it to us. Okay, that's what I'm about to get into, so let's get going. First thing we need to do when we look at the chart here is understand that these are all comprised of calculations of moving averages. So you would treat them as moving averages, basically. They act as support and resistance, depending on where they're at in correlation with price action. So the rules to this are price action, like as far as the price. If the price is above the cloud, somewhere up here, see how this is above this cloud? Above this cloud? This above this cloud? That's considered bullish. Price action is above the cloud is bullish. If it's below the cloud, price action, then we are in bearish territory. So that leaves the rest of the chart. If we're inside of the cloud, this is considered a consolidation period, and generally, but not always, is sideways action. We can go back here and look at this, and you can tell it was a very violent period, but you got to remember these are daily candles, so we had several days of sideways action here in the cloud till it lost support. Same thing here, several days sideways before it broke out of the cloud. Same thing here. Sideways, broke out of the cloud for multiple days. Another one here, sideways. So remember, if it's inside the cloud, a lot of traders refer to this as a no trade zone, and it's a consolidation zone. But we're not going to get into strategy here. I just want to explain what's going on so you know how to read this correctly. So now that we've covered the cloud itself with price action, let's take a look at the blue line and the red line. So the rules to the blue and the red line. The red line is above the blue line, then it's bearish. So let's look at an example of that. If we look here, the red line is above this blue line. So that's telling us it's bearish. It's the same principle when you go the opposite direction. If the blue line is above the red line, then it's bullish. So in theory, how you would approach this would be the same principle as a MACD crossover. When the MACD crosses over the signal line, that gives you a bullish indicator signal. So kind of treat it like that. Obviously, it's not MACD. I want to be very clear on that. It has nothing to do with MACD, but it's treated the same way. So just think of it that way, and it might make it a little bit easier on you. When these two lines cross over, the blue line and the red line, then this is considered a TK crossover. So if the blue line crosses below the red line, it's a bearish signal. Here's an example of it. The blue line crossed below the red line and it's bearish. It's the same principle on the other direction. If the blue line crosses above the red line, then it's a bullish signal. So that's basically how you would read this chart. As far as price action and the red and the blue line. So now we have some other things. There's a thing called a Kumo twist. This is when the cloud twists colors. So this is pretty simple. Obviously, you see the twist here, the twist here, the twist here. But if the green line, or I'm sorry, well, yeah, what it would be the green line. But if the cloud is green, that's a bullish indicator. If the cloud's red, that's a bearish indicator. So there's another thing you can also look for on this. It depends how far the gap is between the blue and the red line down here. So if you start seeing the blue and the red line separate even farther and how they're gapping, they can obviously indicate bullish and bearish nature. What I wrote down here was a widening gap of the blue and the red is bearish if the blue line is above. So a widening gap of the blue and the red is bearish, then, oh man, I'm getting my words tied, sorry. I said a widening gap of blue and red is bearish if the red line is above. Okay? So that's great. So hopefully everybody understands what's going on here now. So let me get a little brief explanation. How is this used? How you treat this? First off, you can follow these rules here, and it'll give you a pretty good indication of what's going on in the market. The second thing you can look at is most of these are used as resistance and support lines, so treat them as such. Here's a good example. If price action broke out of the cloud and you see it bounced up, where did it go to? It goes to right here, and this acted as a resistance point, and it failed, and the market failed. So there's a good example of that. Here, if you look at price action came up into the cloud, it started to consolidate, went sideways, and where did it fall to? It fell down and it found support here. You see it supporting the market? So, like I said, you can treat these as support and resistance. It's a good example here because you got to remember these are daily candles. So when it broke down through the blue line, see how it supported it right here? It bounced back up and it failed. It broke down through the line and they pushed it back up above there. So you can see how it's supporting the market. But once it failed, it came up here and it broke down, and this turned into support at that point. So let's go further into the chart and look at things a little bit. You see how it ran into resistance here? This is a clear indication of resistance. And once what happened? It broke through the resistance. So what happens when you break through resistance? Former resistance turns into support. So resistance, 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 it breaks through. What happens? They support the price. See how they support it? Okay? Let's go zoom in a little closer. This is clear. They supported the price all through here. And it broke down. They pushed it back up and supported it. What happened? It failed. So now what happens? It turned into resistance again for the day. They finally broke through, came up, boom, look, they tried to support it. The market failed, and now former support turns into resistance. So see how they supported the market and now it's resistance? You can go through here and look for all these examples. Then coming down a little bit more, it failed into the cloud. What happens when you're in the cloud? Inside the cloud is considered a consolidation period. So therefore, price action is generally to the more sideways nature. It's exactly what happened to the cloud. It got sideways through here, and it failed. You can see how it was supported, though, by the cloud. So this is clear as day that these are acting as support and resistance. So once the market failed, came down here, it hit, it turned into resistance again. They finally got above it. They've turned into support. Bounced over, turned into support. Turned into support, support. Okay. Once finally this line was broken and it fell through, what happens? Former support turns into resistance. So now it comes through and look, boom, it hit it. It turned into resistance here. Couldn't quite keep it up, failed, and it kept hitting it. Resistance, resistance, resistance. Finally, it broke through. Hit the next line. Resistance. Broke through. Broke it. Found support here. And you can go through here, and each individual market's going to be different, but that's basically how you want to treat all the different lines now that you know what they are, and a brief overview of it. Like I said, I could go into this for hours and hours and hours, but I just wanted to make a quick video and an explanation of what this is, and basically a summary, and kind of give you an idea of how to use it. If you got any questions, then I will address them on the next Patreon class. So ask me questions. I'm more than glad to explain it to you, and we can go into a little bit more detail there. But like I said, I want to keep this video short. There you go. If you missed the class, then that was a brief overview of what we did. And if you're watching this again, there's a refresher for you. So thanks for watching, and I will catch you guys in class coming up in a few days.